The job market is completely collapsing, and the Bank of Canada knows this, as we're going to get into. But don't just take my word for it. Let's actually hear from some people who are in that job market right now about what is going on.
Is anyone else applying to jobs and going through the exact same thing? A job posted this week, over 100 applicants. Posted 5 hours ago, over 100 applicants. Okay, this is crazy. 1 hour ago, over 100 applicants.
So that just goes to show how many people are in the job market right now actively looking for jobs. And here is another one. This lady says that she's applied for thousands of jobs. She's had over 25 interviews and she still hasn't got a job in the Canadian Depression. It's really sad.
Out over 1,000 applications. I'm going to be talking about interviews today. I have been here and so far I have thrown out over 1,000 applications. I'm not joking. Over 1,000, and maybe done like maybe 15 or 20 interviews since I've been here, and that's barely 2 months.
It's just absolutely crazy what is going on in the job market, and the Bank of Canada data does not lie, and the consumer data sentiment for the first quarter was absolutely terrible. And as I'm going to prove in this video, this has been going on since 2022, as I've been saying all along, and even the Bank of Canada's data backs that up. So over 1 in 5 Canadians fear losing their job within the next 12 months. Think about what this means for the housing market. Think about what this means for the economy. Obviously, if consumers aren't out there, they're not spending money, then that's going to lead to even more job losses, and you get into this self-reinforcing doom loop, which I think that Canada is edging into right now, which is going to be very, very bad considering the asset bubble in Canada. So over 1 in 5 Canadian consumers expect to lose their job in a year. So you can see how this has gone up, and look, it's even higher than it was during 2020 right here. So that just goes to show how bad it is right now if consumers think this is worse than 2020. And let me remind everybody, the fact is right now there's no talk of stimulus, nothing like that is happening. There's an election that's going on currently right now, and basically the consumer is absolutely screwed. And we've got the job losses that we just had a couple of weeks ago on that labor report, and it's obviously going to get worse. We know this. So a large share of Canadian households are uncertain about the stability of their job. The Bank of Canada survey found that 1 in 5, 20.7% of consumers expect to lose their job within the next 12 months. That's a sharp 5.3 point climb from the previous quarter and an increase of 9.9 points from last year. A dual front trade war is almost certainly at the root of these eroding expectations. Canada has never before seen such a high share of consumers expecting to lose their job. The previous record was set at 18.2% in Q2 2020 when consumers faced physical barriers to work. Back in 2020, it was one of the only other times that consumer confidence eroded so quickly. And you're seeing the exact same thing that is playing out right now, and it's going to get a lot worse. And what I want to show you is this Bank of Canada chart that I will be linking in the description. And basically you can see since 2020, you can see that the probability of missing a debt payment practically around 0, and then it went slightly positive throughout 2021, and then it quickly tracked down, and you can see all these different factors deteriorating, perceiving their financial situation as currently deteriorating, expecting their financial situation to deteriorate over the next 12 months, perceiving access to credit is currently harder, expecting access to credit to be harder in the next 12 months, financial health index, likelihood of missing a debt payment, and you can see that that has increased rapidly right now in Q1 2025. It's actually higher than we've ever seen if you look back, negative 0.46. So people are saying essentially that they're really likely to miss a debt payment, and the financial health index, even according to the Bank of Canada, is completely tanking right now. So it's not very good at all. And then you've also got this that plays plays into it as well, because even with rising unemployment, as we saw, you basically got study permits that are actually declining. So you would actually expect this to be a net positive for the labor market, because it would mean more available jobs for the same amount of population, because that population isn't expanding as much. Yet you've got the unemployment rate that obviously ticked up in March of 2025. So we've got the unemployment rate that's now at 6.7%. It rose a lot more in certain places. You've got it highest in Ontario and Alberta, and you've got a deteriorating housing market now in places like Calgary as well. Those are things to definitely monitor. Obviously, we know the housing market is very bad in Ontario already. And then this, out of 36 countries, where do you think Canada came in terms of real per capita GDP growth? And this is between 2014 and 2022. So it's an entire decade. And 2022, remember, was just when the downfall really started after the stimulus. So this is up until 2022. So definitely bear that in mind. And you can basically see Canada is flat out last out of 36 countries at 1% growth in per capita output over the course of a decade. And it even explains here Canada's population grew by 16% between 2014 and 2024, lowering per capita productivity and basically decreasing the standard of living for everybody in Canada. Obviously, the Century Initiative, we touched on that last week.
By taking reasonable steps today, such as allowing increased immigration, we can put Canada back on the right path.
Wait for it.
Now, of course, an additional 60 million people will need places to live.
And that is it right there. That is what they wanted all along. Those are things that definitely elites and powerful people want to continue in Canada. And it will be very interesting to see how this all shakes out after the election, of course. And then I also want to show you this, because this could just be devastating for the Canadian economy. Survey finds 37% of Canadian auto businesses considering moving to the US. So take a listen to this.
Are expected to hit some Canadian industries harder than others. Some of the results are striking, and we'll get into those right now. Michael, thank you very much for joining us. Among those striking results, 19% of all respondents, these are respondents across all sectors, say they are considering moving production to the United States. Talk to us about that, Michael. And among automotive and manufacturers, the number jumps to 37%. So my first question is, are you confident in this survey data? Are you?
Yeah, those results actually are in line with what our hypothesis was.
What you've got to also remember and factor in now, since that survey was obviously done, is the fact that this tariff war has escalated, and obviously the US imposing more and more tariffs. So obviously if you're building cars, that might affect your ability, and you might actually think, well, actually I don't want to move to the United States if I'm dealing with a 70% tariff from China, or I'm dealing with tariffs from the EU, because actually it's better to be in Canada and pay that lower tariff rate than have all my stuff coming in, which I'm going to sell, which is actually going to be coming in at a much higher cost, because all these things have inputs, and nobody can deny that the US isn't self-sufficient, and it can't become self-sufficient overnight either. So very interesting what's going on there. Obviously, we've touched on this before, the erosion of business confidence in Canada down to the lowest levels on record. And this is historic, but it obviously goes hand in hand with what's happening with the consumer sentiment index with the Bank of Canada. So obviously we know that things are deteriorating at a very rapid pace in Canada, and we're going to have to continue to monitor obviously what happens with the trade war, but we need to continually monitor what is happening with foreclosures, power of sales, all these different elements of the housing bubble, because the housing bubble is a massive part of the economy, and that is deteriorating at a rapid rate, and the chances of people missing payments just keeps increasing and increasing and increasing, and so does the risk of a financial crisis as well. So anyway, if you've enjoyed this video, I would highly recommend that you check out this video here, and then if you're looking for a VPN and also want to help support the channel, then please go to expressvpn.com/marketmania. That's the VPN that I use, and I will see you in the next one.